It is Wednesday, March 4th. We are about 30 minutes before the stock market's going to open. It has been a tough week to figure out. It's been a couple of weeks of rotating stocks, and we're going to try to make sense of it on this live stream. We're going to talk about stocks, look at them fundamentally. My colleague Daryl is going to look at the charts just to see what's going on with some of these stocks. Daryl and I were catching up before we started streaming and talking about where we are with the market. And I think we could share some of our thoughts with you as we observe the stock market, see where we're headed and what opportunities are out there. How you doing this morning, Daryl?
I'm doing great, Victor. Thank you. It's good to be here, and hello, everyone.
It is good to be here, especially like weeks like we've been having where, the market's doing some let's just call it some provocative things, some moves that are like, wow, the sell-off in software, semiconductor had been under pressure after Nvidia had terrific, earnings. And it's good to have a forum where we could talk about it and kind of communicate. And I hope everybody who joins the stream can put their thoughts out there on the chat. If you have any questions, please pop them in the stream. And if you would like to go over stock and you're a member, just pop that on the chat. We'll take a look at that stock. If you're not a member, want to see a stock, no big deal. Buy a $5 super chat. We will cover it. And if you get a chance, visit my website, rationalstocks.com. I am putting a lot of effort into building it out. Right now, you're seeing kind of the beginning of what I hope to be a good website for investors to get some value out of. Overall, any observations on the market that you want to share at this point, Daryl?
I can share the SPX chart, the put call ratio. And we've been trading flat basically since October, despite all of the rotation we've seen in the market. The SPX has been pretty flat. So I'm going to move in just a little bit so it's a little bit easier to see. I had this support line drawn before, and we've tested that one too. This was an intraday, and then yesterday we basically, the open was right at that support level. So because we traded intraday down a little bit and then recovered throughout the day, I added this support line that goes back to the 17th of December. We had not been that low since, but we did intraday at least pass through that particular support level. Then we have the 200 days sitting down here where I set my mouse there and drag it down to there. We're about 3% above the 200 day at the moment. And I also added 150 day, which is sitting right at this support level here and was tested intraday yesterday. So then one of the things I like to look at, and I'm going to go back out to a year for this because it's a little bit easier to see, this put call ratio. So the lighter gray line in the back is the raw data, and then the darker blue is just a 5-day average. And typically you see about a 0.55 reading on the put call ratio, the average. But we've been increasing since we got down to about 0.47. I should say this is a bit elevated. So we got down to 0.7, but we have been rising, and then it went down a little bit, but I see it's increasing once more. So one way to start looking at this is you can go to the peaks when the put call ratio really skewed towards the puts. When it kind of peaks out, you can see how close we are to a bottom. And that's almost in every single case. So here looks like we were about 3 days. We were within 1 day. We were within 3 days. So this one didn't quite work. It was the opposite, but most of the time you're getting towards a bottom. Here was a bottom. This one didn't quite work, but we're starting to see higher highs here. So we have 3 higher highs. We pulled back down and now we're moving back up. Now, with that in mind, by the way, the RSI on the S&P is at 43, so we're in bearish territory, and the PPO is in bearish territory as well. So now I just want to take a quick look at the VIX, because what we can see here is just a steady increase in the VIX over time. Yesterday we were at 2357. The prior peak above, well, we had one above 20 here on the 23rd and then one on the 5th. So when this kind of peaks out, you also are somewhat at a bottom as well, but I don't think we are through with this right now. I was telling Victor before the show started that I'm just being cautious right now. I think we could have another pullback before too much longer. A correction, just to give you an idea where that would be, if we look at the high that we had about right here and just pull down 10%, that would put us at 62.75. So that's what a correction would look like. We're far from it at the moment. But 5% certainly would not surprise me. That would put us closer to the 200-day moving average. So anyway,
Excellent
that's
analysis.
what's
I
that?
like excellent analysis.
Oh,
And
thank you.
I've said this many times to investors in the community is, you can listen to another investor and just about every single time you'll take some knowledge, a little bit of wisdom away. And as you know, Daryl, when we started streaming together, I'm not a technical trader. I'm not a technical investor. I'm a fundamental investor. I'm like, kind of see the world through a different lens, but I really do appreciate how you view the world, because it makes me aware of how you and many investors are viewing the market, which is productive for me. I'm going to go about it a little different. I'm actually going to be, it's not that I decided to drink some happy juice this morning. I'm just going to tell it like it is. I'm almost like, in a way, at times, a little bit of a contrarian. 6 months ago, when we were just going and going, what was my complaint? Oh, stocks are too high. Man, I'm worrying that my portfolio keeps going higher and keeps going higher. And that was I think an internal feeling that I had, because we were just expensive stocks, man. The PEs were really high, and they kept going higher. And now we're seeing some constructive work. So Bitcoin, it's up 4.5, but look at the 1 year and you see that, hey, we had a pretty nice situation 6 months ago, 4 months ago. And since then, boy, Bitcoin has been like down 42%, even with the recent little rally there. So a lot of the pricing on this risky asset has really gotten better. Okay, well, that's good. That's very constructive. We're not going to be overheated on the risk side. Let's take a look at this heat map. And here's where I'm kind of going to really focus and kind of share with you at least what I'm observing. I could be off, but I'll put it out there. So we're seeing year to date that, of course, software has just gotten beat up. Man, it's been You've heard the expression, it's been beaten like a rented mule. It's pretty much been the case for software. Just it's been an area that the investing community has said, we just want to see what's going to happen with this AI thing. Is it going to hurt it? Year to date, it's down a lot. And we've got NVIDIA pretty much not going any higher. The market's also concerned that, hey, maybe we're going to have a pullback. All these big stocks, and for 3 years, these things have really worked, with the exception of Amazon. I don't think Amazon's worked all that great. And other spaces have seen that capital flow into their space. Energy's done well. Staples have done well. Industrials have done well. Materials have flourished. The number one guy on our stock picking little contest is pick the material stock. Boy, he's flourishing. He's up 120%. We're gonna need a few things to happen to catch that guy. But congratulations, Genetic Smite, by the way. He's on the stream. So we've seen a rotation into this. Is productive to me. For 3 years, it's just been all the capital's been kind of staying over here. So we're seeing that as a productive rotation. But let me zoom in and kind of go, okay, but what's been happening over the last couple weeks? Now, the last week, 5 trading days, it has not been a pretty picture. Just ask NVIDIA and its stockholders. It hasn't been a perfect picture, but look at this software space. Okay, now it's too early. It's too early to say, hey, we're back, baby. No, it's a good week in a terrible year. So once we get like 6 months of goodness in there, then we can say, okay, look at that. Investors are in it to see those stocks go higher. But it is encouraging to see that software stocks have been going higher, and Intuit up 20% in 5 days. Now that's a pretty good number. So when you see Intuit going up 21%, as I've shared, fundamentally, Intuit is an excellent business. They have a strong moat, the network power they have, because they're a little bit like Facebook, where so many customers, they don't want to switch over. It'd have to be like Intuit does something terrible and they're like, oh, we hate Intuit. But that's not the case. They just keep getting the job done, putting out good software. And I think it's a terrific business. One that for many years I've loved Intuit. I've been a customer of Intuit for more than 30 years. And I could never get into the stock because it was expensive. It'd be like, oh, I can't buy Intuit. I'd rather buy these other software stocks. And finally, the market just beat this thing down so bad that I'm like, well, I'm switching horses. I sold some other software companies that are lesser known and bought what I believe is a brand, a company, a business that I want to own for a long time. And now it's beginning to work. So that looks really encouraging. You got FICO's been beaten down. It's coming back. ServiceNow is coming back. Looks like Workday was beat up big time, coming back a bit. I don't consider Uber a software stock, by the way. Consider it more of like an industrial transportation company. So that looks productive. It looks like, hey, we're building something here. Okay. And I know I saw Tomas is on the stream. I know that, based on what he shared, he is a believer in software stocks. I am absolutely a believer in software stocks. But the market's pretty much been taking these and taking them so low. It's been unbelievable. And look at Netflix. Boy, being a Netflix stockholder was fun for the last week, 25%. So we're seeing some stocks really move higher. The communication stocks have been doing well. Energy stocks, of course, with high oil prices, they have been doing well year to date, last week. But these will perform every so often. Now, the good news, bad news about energy is when energy has like a banner year, it usually means everything else is like not doing well, which is kind of like, man, terrible year, but my Chevron stock's up a lot, my Occidental stock's up a lot. Well, it's just, It's part of the game. Probably at least once every 10 years, we have a terrible market and you see energy flying high. 2008, we had a peak in oil prices. Well, you know what happened in 2008? We had the Great Recession. We had a terrible stock market. 2002, we had high oil prices. Well, we had a terrible year in 2022. And here we are. Oil prices are going up, and we've had a really, really difficult market in certain ways, right? Because some stocks that just have a lot of intrinsic value are being sold off with these stories around AI. Is AI going to hurt these guys, replace them? So I think it's constructive. I think that if you show me a great business and you knock on my door and say, I would like to sell you Microsoft at a discount, I say, thank you. And I buy Microsoft. I've been buying Microsoft. And same goes for other stocks, right? That's the single software stock that I've been buying, by the way, because I'm afraid to buy over here until this is proven out to be a real trend. I'm probably going to listen to Daryl quite closely. And when Daryl says, hey, you know, I think the rally in these stocks is taking hold. It's going to continue to go higher. I'm probably going to put some of my capital, more capital into software stocks. But until then, I'm just going to slow play it. So that's where we're at over the last month. Of course, energy's been doing really well. Utilities doing well. Some of these safe places have been doing well because we have a scared market, a little more fear. Understandably. One of the stocks that I started buying into off of, I think, really low pricing was Target. It's doing well. And Costco's doing well. I went to Costco yesterday and got out with $146 total bill. I feel pretty disciplined, Daryl.
Yep, exactly.
That's like, wow, man, how did that happen? And you know, we ended up buying like 10 items. I'm like, whoa, is this right?
The further you live away from one, the more that total bill always becomes.
Yeah, exactly. Exactly. But there's some stuff that, like shaving razors, right? I mean, you can get them online. If that's your option, I'm sure it's a pretty good deal. But if you were to buy razors at the grocery store or you buy them at Costco, you're getting such a good deal at Costco. I cannot buy, you know, my razor cartridges anywhere but Costco. Just can't do it on principle. My coffee pods, can't do it. Got to go to Costco. And there's a couple of like products where it's like has to be from Costco on principle. All right, enough of my personal shopping. So over the last month, again, we've seen some things happening. We're about 12 minutes from the market opening, and we'll see what the market does. The other thing I want to talk about is what that is, again, constructive. It gives me a sense of not confidence, but I would say comfort, or we have a pretty good base. And here's where I'm going to go is on Monday, we had terrible news over the weekend. We have a conflict going on in Iran. We got missiles and airplanes being shot down and just really bad stuff. And the human toll obviously is big. And for that, I wish this hadn't happened, but it's happening. And you've got oil prices screaming higher. So this is the weekend. We get to Monday morning, market's selling off. And at first glance, I'm like, I thought it was going to sell off even worse because that's some pretty intense, news. It's not like, a head cold kind of news. It's pretty intense news. And then the market traded higher. And it's like, oh, wow, interesting. So the market kind of powered its way back on Monday, especially yesterday. The market opened even lower than Monday. And again, the market powered higher. So I think that is a sign that especially around some stocks that are really discounted right now, priced really well, attractive. Investors are like, you know what? I might be getting in a little early, but I want to get into that company and I'm going to start buying now, maybe dollar cost average into that stock. That is another item that makes me feel comfortable. Like, hey, we might be near a bottom. We might go even further down, but not too much further down. I think we probably are setting up to have good pricing on some companies that are going to reward us over the long haul. So those are some opening thoughts. Let me catch
Let's
up
take
on.
a look at the Bitcoin chart in a
Let's
little
do
more
it.
little more detail. So I've had this auto support resistance line on here for a long time. I just wanted to show you that where that's located. So back in 2024, it quiesced around this price and then it broke out. But the reason I like to look at those is look what it's done for the last month. It found that price, and I don't know whether it's because there's others that are looking at that price and it found a bit of support, but I don't really care why it does it. It's just I like to be able to see that it has found some support that's been there for quite a while. Now, the next thing I want to point out is we did close above a 21-day. Well, this is always live, so I'm not looking at an ETF here. I'm looking at Bitcoin real time, but it's above the 21-day moving average, which bottomed out and rolled over the last 3 days. That's a sign of strength. We are above 50 in the RSI. We haven't been above 50 since the 19th of January. We also got a buy signal on the 15th of February. That is in bearish territory. But I also see that the money flow has moved back into bullish territory as well. So we're seeing some good indicators on Bitcoin at the moment.
Very good. And it's been beat up. And when Bitcoin goes higher, like some other stocks like Robinhood and Coinbase rally higher. Does I think it's Figure. Does Figure rally higher when Bitcoin goes up?
I don't think it really tracks Bitcoin. They're more of a stable coin. So I haven't really looked at that. I'll take a look at it here in the next week or so, and we can get back to that.
See if there's a correlation.
Yeah.
All right, we got some good questions arriving here. First one's from Tomas, who, does PE ratio mean anything at this point? And it certainly does. And here's, when you look at the PE ratios, now I don't invest purely on, well, if a stock hits this PE ratio, that I'm in. No, but the P ratios, here's the most valuable companies that we have on the stock market. Not too long ago, this NVIDIA was clearly in the 40 range, 30 range. Apple's down to 30, Google 26. Okay. And this is after the stock's done well, 78% rise, right? Microsoft 23, 27. These are very rational PE ratios. So in general, I think it does make a difference, or I should say, when I look at that PE and I value a company, say we're looking at a Meta, I think Meta's discounted, and I calculate a discount based on their free cash flows. I look at their growth, and they're growing really well, mid 20%, right? They have gross margins in the 80s, and you're going to give me a 21 PE? Thank you. Thank you very much. And that's like when I go to Costco, I know I'm going to get a good deal. Meta right now is on the shelf at Costco. And you don't have to buy a giant bundle. Like if you buy paper towels at Costco, you You got to have a truck to bring that package home. No, you can buy 1 share, you can buy 10 shares, 100 shares, pick your poison. So I think P ratios do matter because
Yeah,
it gives us
jump down there to Walmart just to
oh,
put things in perspective.
Walmart's collecting a lot of investors because, in my opinion, I'd love to get your opinion on it, is investors can get their head around Walmart. I know what they do. Hey, they've been doing well. They've been growing 4 or 5% a year, top line growth. And that type of mindset I get, not the way I invest, but I understand that some people do. So I'll leave Walmart up to somebody else. I invested in Target. I think I'm getting a better deal. Target, I think my PE ratio is 14 compared to 43, and they have similar growth rates. And Target has better profitability fundamentals, higher gross margin, and soon I think is going to have better net profit margins. So I think Target's going to be the horse that I want to ride for a year or two. And we'll see when I want to get out of that stock. So PE ratios do matter. Your thoughts on PE ratios, Daryl?
Yeah, let me show a couple charts. It helps visualize it. So here we're looking at Meta. They are trading below their fair value and their normal market multiple. So from a risk perspective, this looks really good to me. You're buying it below what its actual value is. Now, people are running to safety right now. The staple stocks have been doing fantastically. And so here you see Walmart. How much risk do you think people are taking right now with Walmart? Walmart. Look how far they are trading above what is considered their fair value and what the market over the years has typically traded Walmart at. So they should be about 91 and they're trading at 127. So people that are buying it right here are taking on a lot of risk. If for any reason it declined back to its normal market multiple, you're looking at negative returns. So PEs do matter. I don't take them at face value, but they do matter. This just tells me the market is seeking some safety, but it's a false sense of safety to me.
Right. Yeah. Yeah, good question. And I think Peyton was commenting that maybe software stocks might be new safety stocks. And I think he's making a point that I'll double down on, which is in this chart that you're showing helps me illustrate the point, which is if you have stocks that are so low priced that you have a big margin of safety, yes, an investor might feel like, how much further lower can Salesforce get? It's already been beaten down so low. They keep growing, they're making money. I mean, they make a lot more money than Walmart, but different industry. So I think there is some there's something there that I think investors might be clinging to, which is, hey, I'm going to buy the most beaten down industry, which is software at this time, that has some good fundamentals. All right, Ricardo wants to look at Abbvie. I put that on the list. And then we've got, what do you guys think about long-term Microsoft and Google? So both are long-term holds in my book. I have the most capital invested in Google. So that tells you where I'm at with Google. And I've been buying into Microsoft. Your thoughts on Microsoft and Google?
So Google did get a bit extended. They are coming back down to their normal market multiple, but they're still a long-term hold for me. And then Microsoft, it's a long-term hold as well for me. But they are trading a bit above their normal market multiple and fair value as well, according to FastGraphs. And I know Victor has it valued higher than I do, but It's not a bad price right now, and I think over the long term they're going to do just fine.
Daryl's having a internet glitch. You there?
I'm here. Yep. Can you guys hear me okay?
I can begin to hear you now. Can you hear me?
Okay.
That was compliments of my internet.
Yeah, I think we lost your internet today.
Yeah, yeah. Universe is not where the then I wanted to talk about the data center build out for the big hyperscalers, and I'll give you my point of view on something. Settle in. So here's my thoughts on. We're going to look at Microsoft. Microsoft. You there, Daryl?
I'm here. Yep.
Geez, man, my internet's killing me. You can hear me okay, right?
I can hear you okay right now.
All right, let's go with it. So they're pouring a lot of capital into that data center, and the way I view the data center, because the data center gets built out, and then you, in essence, lease out, rent out. Companies consume that building, 1,000 units, and then people rent out your units, and they pay you cash, and voila, you make money. And that's what they're doing. You know, Microsoft, Google, AWS, Amazon, and others are building out these big data centers, and then they're going to rent this out. So the cash flows of the future are going to look really good. And these are very sticky businesses. It's very hard to move out. Like once you got an application, a workload at a data center, you kind of just sit tight. You don't move around. So these are really strong businesses. So I would say that Microsoft long term is going to be a stable stock. I think they're going to be profitable. They're going to have consistent growth because, again, once you're in that data center, they can raise the rent, they can raise the prices, and have a solid growth trend due to price increases. And your customer isn't going to go anywhere. It's like they're not going to pick up and move a big, workload. It's very risky. So that's one thing I would. All right, so let's take a peek at this heat maps. Man, my internet's killing me today. All right, so assuming
It's still breaking up a little bit, but we can see the heat map now.
My internet keeps going in and out. So let me do this. Let me give you the screen, and then I'm going to try to log back in, okay?
Okay, sounds good. So we're going to talk about ABBvie. We can go do that right now. Let's see. I'll look at it right here. I think I have ABBvie saved. Yep, we sure do. So AbbVie, let me show you my trades because this has been a great stock for me over the years. So hopefully you can see this okay. I first bought AbbVie on December the 24th. It was probably one of the very first stocks that I ever bought in 2020. That's when I started managing my own account. And I have traded this many times because it is a stock where the price goes up and down. So it lends itself very well to, I hold a core position and then I trade around that. I sell when I think it's getting too high using technicals, and I'll wait and buy it at a lower price. So this one has just lent itself very well to that. So these tranches that are in the light colored green, those are ones that I previously owned and sold out. But you can see all of them were at profits. I have two out of all these trades that have been a loser for me. So I own 170 shares right now. I have owned as many as 1,200. Um, but my intention the entire time was to hold a core position at about what I want for my portfolio. And I go overweight when the prices are low and return back to equal weight or go underweight when the prices are high. So what this has allowed me to do is have all of my capital returned. So my adjusted net investment is negative. So these 170 shares I own at basically no cost to me because they've returned all of their capital, either in appreciation, dividends, and then I also trade options. So this has really worked out very well. All of my winning trades are about $1,000 each. The two losers average $58. So that gives me a win rate of 96. And for every dollar that I've lost, I've made $17.22. So this has been a stock that I have done very well on. I have several that over the 5 years that I've been managing my own portfolio have returned all their capital to me. And I really like it when that happens. So let's take a look at AbbVie right now and see where we're at. They've been trading sideways basically since the 30th of September. So I'm going to zoom in just a little bit more. They are currently trading above an upward sloping 5-day, 21-day, 50-day, 200-day. All of those are in the correct order. The RSI is bullish at value of 61 at the moment. The PPO is positive. We've been on a buy signal since the 26th of January. And let me go back out to a full year. And I'll set my cursor right where accumulation is sitting, and you'll see it's at a 1-year or 52-week high, and the money flow is currently positive. I'm not buying it right here. I wait until the technicals tell me that I can go overweight. I did do that here recently, not too long ago. So AbbVie is one that I think it's great to have a core position. They pay a pretty good dividend. My dividend yield on this one is much better than this because I was buying at much lower values, about half of what this is right now. So my yield's probably twice this amount. But anyway, this is one that lends itself to trading if you're willing to watch the technicals. There's always news coming out in the biotech area that affects the price. And I'm always glad to see that because I know AbbVie is very, very well managed company. So anyway, they had one product, Humira, that came off the patent cycle, and everybody thought that they were going to hell in a handbasket, but they basically replaced the revenue that they were getting from Humira with Rinvoq and Skyrizi, and that revenue continues to grow at a very rapid pace right now. So they've done a fantastic job of managing their pipeline, doing acquisitions, and what have you. And I stand behind them quite heartily because they've done very well for me over the last 5 years.
Nicely done. Can you hear me okay?
We can hear you great now.
All right. Well, we'll
You're
see.
shaking, putting stuff on your curtains there.
Well, that's what happens when you're streaming from outer space, you know. Unless I got some kind of solar storm of some sort. All right, so let me show my valuation on AbbVie. So AbbVie, I agree with what Daryl was saying. Now, there we go. So the one thing I would say about AbbVie is they carry a little bit too much debt. Their debt level's kind of high. That's not a big deal, but it is debt. I don't like debt. I kind of wish they didn't have as much debt. Overall, there's a good discount there, and they pay a nice dividend. So this stock here is discounted, not the biggest discount I'm going to find out there. And I do agree that they have really been a good stock for a long time, have good products, and they continue to grow. So AbbVie is there. There's a lot of discounts right now in healthcare. If and when healthcare, I think they've been doing okay, I have to say, for the last year. But if we ever have like a nice upward run on healthcare, I think it's going to be a good place to make some money. I'm not in AbbVie. I've been an owner of that stock in the past. All right, so I think we have some other comments. I think one of them was on Applovin. Applovin's up nicely today. This has just been a really wild stock. Look at that. I'm looking forward to hearing your comments on Applovin because it's been a wild ride for investors. Look at that. So these guys are up 4.47. They announced on the 11th. They had good earnings. The growth of the business is looking good, 70% growth. The last quarter, not so great, but they've been under a lot of pressure. Sometimes investors love this stock and they buy into it. Look at this profitability. Incredible. And it's like a very volatile stock. Goes up fast, comes down fast. And it's supposed to continue to grow its revenue. The company is going to grow its revenue nicely. This year, it's going to have good growth, and its profitability is going to go up, bringing down their PE ratio. That looks really good. They can maintain growth. This business is worth a lot more because of their profitability. So let me kick it over to Daryl to look at Applovin.
Yeah, for the first time in a couple of months or 3, this is starting to look a little better here. Okay, so I'm going to do some modifications because we haven't looked at it in a little while. So they are trading above this line here that I had in red. So I'm going to change that to green, but because it is now what I would consider a support level. So I'll bring that out. It hasn't quite closed above this one yet, but let's see what we're seeing and what I think may be a bit more constructive. One thing I want to point out is when we were talking about it back here, I kept mentioning this bearish negative divergence on both the RSI and PPO. Sometimes that can take a while, but it basically did kick in and we got a 48 reduction in that price. That's why I pay attention to these things. I don't necessarily take action on them immediately, but when some other indicators start telling me that it's starting to break down, then I would really trim my position here, and that would have saved me a ton of money by following the process that I do. So let's zoom in just a little bit. And what we see here is the 21-day has bottomed out and is increasing now. And today, if this continues to the close and we can get and close above that, that's constructive. We have a 200-day that's still increasing. The 50-day is coming down towards the 200-day. If it crosses below the 200-day, that's what's called a death cross. And typically that starts indicating a time that you can start looking to pick up some shares. The 5-day is moving higher, and it looks like it's right at the 21-day. So this would be the first time in months that I would be starting to get interested in this one. If it can close above this 21-day and stay above it for the next couple of days, then I don't own this one. I've never owned this one, but that's where I would be considering purchasing some shares. They've been below the 50-day moving average since the 31st of December. So when this RSI dropped below that 50 line, could have even happened over here where I may have been getting out because I saw these negative divergences. But anyway, we haven't been above a 50 line since the end of last year. Today, we are crossing above and moving back into bullish territory. And on the PPO, we did get a crossover. It is in bearish territory, so it's not out of the woods yet, but it is starting to look good here. And I see the histogram bars are getting larger, which means the delta between these two averages are improving. And I'm also seeing accumulation starting to pick back up. And I can see that money flow, if it's below 0.05, then it's considered neutral. If it's between negative 0.05 and positive 0.05, it's neutral. But once it crosses above 0.05, then it's bullish. So we have several indicators that tells us that this is starting to look like a much better asset at the moment.
Looks good. And when we look at Applovin from valuation perspective, those cash flows, they are creating so much free cash. It's pretty incredible. They're discounted by 35%. So a long-term investor, if you buy Applovin at the right prices, it could really be a nice winning stock. And on their earnings per share valuation, it's priced fairly. So that's what you have. That's what you're dealing with over at Applovin. The other stock that Mike wanted to look at is Wix, and it's up 8%. Wow. So it's up 3.65 over the last month. It's really taken off from February 23rd. It announced today, and I imagine they announced before the market opened. Yeah. So their earnings announcement was probably really positive, and the stock's really flourishing today. So Wix creates websites for the typical business person, right? You can create a website on Wix fairly quickly, and it's a nice, elegant website. It's not going to be the most advanced website you've ever found, but it's a professional website for maybe an accountant that wants to put his shingle out there on the internet, or some type of small business. So looks like the business grew nicely. And let's take a look at their financials here. Looks like it is in there. And the quarterly, yeah, they just keep growing. Like Wix is one of those businesses that the stock market is like putting that category up. Is AI going to hurt these guys? And, you know, it's not hurting them yet. I don't know when it's going to hurt them. I don't know if it's ever going to hurt them. They just keep growing very steady, and they're very profitable. They have very good gross margins. They have good free cash flow. Look at that cash flow. And they have a pretty sticky business because once you get your website out there, you don't want to rebuild a website every year. You just want it to continue to run, get you some leads, present your business out there to the world. So Wix is there. My valuation on Wix, I could show that. 71% discount. Incredible. Just they've been sold off so harshly that's where my discount is. Because this stock, I mean, at one point it was a $300 stock. It's down to 80. So Wix is moving higher, almost 10% now. Incredible. What do you think about Wix, Daryl?
So we have a long-term auto support resistance line that they broke down below. And today they're closing. Well, we're not closed yet. We're still trading. We're trading above that auto support resistance line. We're also trading above a 21-day that has rolled over. You can see that it's rolled over and now going back up. The 5-day actually did that a few days ago. The RSI is above 50, bullish. 21-day above it, bullish. Buy signal on the 25th in bearish territory. And accumulation is starting to pick up in money flow. And I've been spending a lot more time here recently studying volume. So I want to share something that I see here on this one. Notice all this volume on this day. It was, wow, 7x what normal daily volume is. So 7 times as many shares were traded on this day. But look at the price. It barely moved. So if I understand this correctly, basically what that means is there were sellers there that were absorbing all of the buyers. So a lot of sellers were holding shares that they wanted to get rid of. They got rid of them, and now it looks like, and I think we're going to see this on Intuit and CRM as well. But after the big absorption of shares that were for sale here, and I can look at the volume and look how many buys compared to sells at this price level. And it was even more here. So people were definitely stepping out, but now that they've stepped out, we've got good volume with much better price action, more volume with better price action. And it looks like today, because we've only been open 23 minutes, and they are almost already at their average daily volume. So
wow.
They've traded 1.4 right now, and their average volume is I guess that's 2 million shares. It could be 2 billion. It's probably 2 million. So anyway, this is actually starting to look good as well. Now they are going to face some resistance right here at this 50 line. You can't help that. And I also see that they're surpassing that low there. So I don't know, this is starting to look okay to me.
It's really beaten down. And, as a theme within software, you keep seeing stocks that are historically were trading much higher. They've been beaten down, and they're beginning to see a nice little rally. Look at Intuit here. About 8 months ago, it was an $800 stock. Today it's $433. Just got sold off so harshly. 5-day, it's up 21%. They announced their earnings on the 26th. So this was last week. And they keep growing. AI is the boogeyman. And the boogeyman's supposed to take away a lot of the revenues. Well, it's not. They are getting bigger, so their percentage growth rate should be coming down because you're just comparing to a bigger number. And this is the year we're in, growing at 15%, 12, 12, 12. And this is a very profitable business. They already crank out a lot of profit. They're growing that profit. They're in the teens as a PE ratio. Now, a PE ratio should, like, if you have a business that has low profitability, low growth, a 12, a 10. Okay, that's where those stocks ought to be. And then if you have businesses that have high profitability, have good growth, 20s, maybe even 30s, 40s, right? And we look at Intuit, they have 80% gross margins, 21% net profit margin. What are they doing in the teens? What are they doing in the teens? They should be a 25 PE. And that's my observation on Intuit. That's why I own the stock. I think it's discounted. I don't know when the market's going to have a long-term rally around these stocks, but I can tell you I want to be a part of it. Looks like my lookups aren't working on Intuit, but every way I look at it, it's discounted, and it's discounted. And you see this big sell-off. This chart really shows it well. This is why I'm invested in Intuit. Is the market's gotten really emotional on Intuit, thinking that it knows AI and the boogeyman's gonna take out Intuit. I don't think so. I don't think there is a boogeyman, and I think Intuit's going to be fine. Over to you, sir.
Well, this is starting to look constructive as well. So this is the first time that yesterday would been the first time that I would be interested in picking this up on a technical basis, but they are trading the last 2 days above an upward sloping 21-day, and the 5-day is now upward sloping. The 50-day is still declining. But this actually, I mean, even if you're just a trader and traded it back up to where the 50-day is, you're looking at a 20% gain here, as long as the market overall cooperates. They're not quite bullish on the RSI yet. They're at 48, but definitely making progress in the right direction. They really hadn't been above 50 since the end of last year. They also have a buy signal in bearish territory since about the 26th of February. And I do see a bit of accumulation, although the money flow is still bearish at this time. So money flow and accumulation don't get updated until the end of the day. So we're looking at the close yesterday. It might actually be moving into neutral territory as it's trading today. Those just don't get updated every single day. I do see the average volume starting to pick up, and we've had above average trading for the last 4 days. So this is starting to look constructive again.
It's early, but when you see huge sell-offs in spaces and in companies, really good companies, it's usually setting up a really nice opportunity. And I'm seeing that. It's early. It's early in this little rally. We're sitting here a month from now where these things continue to rally higher. I think we're going to see some really good gains in these stocks. So thanks for covering Intuit. Looks interesting. Here's where the market sits. We've got the semiconductor space going higher. Microsoft's going higher. Palantir's been having a real good week or two. It's been cranking up. Meta going higher. Amazon, there we go. That's a little more like it, Amazon. And man, did you notice Dell had really good earnings? Was it
Yep.
last week? They did
Yep.
really well. Yeah. Looks like energy's giving away some of their gains. Got it. So, all right, that's where we're at. That's where we're at with this stock market. It's still going to play kind of hard to figure out, but I like markets that, are difficult, challenging, because if we do our homework, we get an advantage. We get to make money. And then when everybody else joins the party, they just pump our stocks higher. So that's how I feel about it. All right, let's land the plane because I've got a twin engine airplane and one of my engines is out over here on my internet. So I'm going to play it safe. What's going on with your channel, today and for the rest of this week?
I'm thinking about doing a detailed dive on CRMD. They report tomorrow.
Mm-hmm.
But I did put out my weekly stock charts review, and the trades that I was making, those seem to have been pretty popular here lately. And then I did put out a volume analysis on Intuit and CRM. So so far those aren't playing out exactly like I thought they were, but we'll have to see because they are both looking. Intuit is better than CRM, I can tell you that right now. CRM hasn't got very constructive yet. Intuit has, just like we saw on the chart just a few moments ago. So that's what's going on with mine. CRMD does report tomorrow.
Thank you, sir. And man, I had it a second ago. Give me one moment. Okay, cool. All right. So I created a video on CrowdStrike. That's a big stock. And check it out. It's only members for now that can see the video. But I put my analysis into it. And CrowdStrike's been a stock that I've been following for 3 years. And I think in general, I've gotten it right on the stock. If you look at the 1-year performance, it hasn't been very good. And it is a software stock. So the whole fear of AI, and I do think AI could be a threat to CrowdStrike when you think about, CrowdStrike's a single software type business. They're not diversified. And if somehow like some innovator comes out and says, oh, I'm using AI and it's got all these new way of doing cybersecurity, it's going to put CrowdStrike on the defensive. So overall, take a look at the video. I think you'll find it interesting. So looks like we have a last question on software. Is Adobe on an upward trend? What do you think, Daryl?
I can show the chart. So it
Yeah,
looks a lot like Intuit at the moment. Just keep in mind, as long as this 200-day is decreasing, they're still in a downturn.
Mm-hmm.
They're in declining price action. So when I'm talking here about just in this short term, they are looking constructive over this 1 week view, just like Intuit was. So they're trading above an upward sloping 21-day, and the 5-day is moving higher. It's almost exactly like Intuit. They're not quite 250 on the RSI. We did get a buy signal a week or so ago on the PPO. Money flow yesterday did move into bullish territory, and we are still getting ever so slightly. That's not the one I want to be looking at. We are getting some accumulation. So that is good because it had bottomed out right here at the worst distribution we've had in the last 52 weeks. So it is looking good. Just keep the overall picture in mind that this is a declining price trend. So make sure you manage your risk with this. But right now, this looks like a great time to buy. to me. Just manage your risk. You're going to have some resistance at around 300, but that's 27 points away.
My feeling on, let's say we have a failure of this stock going a lot higher. How much further can it go down? It's like Adobe is a very profitable business, right? They continue to grow. So yeah, AI may affect their business, okay, but it hasn't affected it yet. And they're very profitable. They're cranking out a lot of cash, good balance sheet. So they can wait this thing out for 5 years easy. These guys are cranking out so much cash. There's like it's not like a situation where, they got a bunch of debt. The business climate's not in their favor. No, these guys are like have very good fundamentals. So let's say it fails to rise a whole lot more. Can it come down? Yeah, but it can't go below zero, I don't think, right? But I think it's highly discounted, as I've mentioned. I own Adobe. I own CRM, Intuit. I own a good number of software stocks. It's an industry that it's right in the center of my knowledge. So I'm very comfortable keeping those stocks. All right. So we covered all the notes there. It looks like Duolingo is going higher. Interesting. Let's take a peek at that. Duolingo got destroyed on their earnings. They went down hard. Oh my gosh, look at that. Brutal. And this one here, I have to put these guys in the, AI is probably going to change his business fundamentally, and I don't know if they're going to be as successful going forward. I wouldn't touch this stock. Just from a qualitative perspective, I don't want to touch it. All right, so let's end the show there, if you wouldn't mind. I'm going to turn my computer off and see if I can avoid having that type of experience again. It's never fun. And I think everybody's asleep at home, because usually when the internet goes down, I'm the IT department here at my home. I usually get like, there's 3 other people that live here with me, and somehow I get like 25 complaints when the internet goes down. So I got to figure out what the heck happened. That usually doesn't happen with my internet. All right, everybody, have a terrific day. Let's fingers crossed this market keeps rewarding these really good stocks and really good companies. And really good to stream with you, Daryl. We'll be back on Friday, assuming my internet works. And hopefully you can join us then. We'll see you guys.
Take care, everyone.